Hello traders and welcome to this week's Market Outlook from Exness. Here we're giving an idea for a potential trade over the next few days, the narratives that might be supporting that movement in markets and what traders who were to take the position would need to be aware of. But before looking at this week's idea, we're going to be discussing briefly the performance of last week's idea. Last week the potential trade was a buy for euro-dollar after a bounce from support around 109 with a potential target around 110.5 or 111. That idea definitely still seems to be active, although it still hasn't fully reached the target yet. So depending on the results from American inflation on Thursday, it might be possible to see further continuation upward for euro-dollar. Now for this week's idea, I'm Michael Stark, Financial Content Manager at Exness, and joining me to give the idea is Andreas Themistocleus. Thank you, Andreas, for being here.
Hello, Michael, and thanks for having me.
So what's the idea for a possible trade for this week? What are you looking at?
So I am thinking of a potential short on the pound-yen pair with a potential target around the 181.5 price area. The price has made a rather aggressive rally in the early days of August and found resistance on the upper band of the Bollinger Bands, while the stochastic oscillator is recording extreme overbought levels. The 50 and the 100-day moving averages are close to each other, indicating that the price has the potential to move in either direction. The target around the 181.5 area consists of the 61.8 of the daily Fibonacci retracement level, as well as the dynamic support between the 50 and the 100 moving averages.
And what are some of the most important narratives, or the single most important narrative behind the possible move down by pound yen?
So the major factor that is affecting this trade is the shift in the stance of the Bank of Japan to release the ceiling in their bond yields that used to be at 0.5%. And if we take a look at the chart of the Japanese 10-year bond yields, we will see exactly that. The rate has reached above 0.6%, which is the highest figure since 2014. This means that money is flowing quite aggressively towards the Japanese yen, making it extremely difficult to take a trade against it in the short term. So with this environment, we shall be looking at the main pairs of the yen, like the euro, the USD, and the British pound, and try to find a good spot to initiate a trade. Euro and USD do not present an ideal setup on their respective charts, but the British pound has a relatively nice setup on the technical side and also has economic data coming up that could create volatility for the pair.
And what are some of the most important events on the calendar that are coming up traders would need to monitor this week and into next week?
In terms of economic data for this week, on Friday the 11th, we have the preliminary data for the British GDP growth, which is expected to remain stable on a year-over-year basis, while the respective Japanese data, which are due on Monday the 14th, are expected to increase by 0.4%. On Tuesday the 15th, we will see the figures of the British job report, where unemployment is expected to remain the same at 4%, while the claimants are expected to go to negative 30,000. On Wednesday the 16th, the British inflation rate is expected to decline by 0.5%, while the core inflation is expected to fall by just 0.1%.
Okay, thank you very much, Andreas, for the idea and for some of the rationale behind it. So in summary, the possible idea for a trade this week is a sell for pound yen with a possible target around 181.50. The primary narrative that might drive pound yen downward is the Bank of Japan's abandonment of its ceiling of yields of benchmark decade bonds at 0.5%. The most important release coming up this week that might affect the position were traders to take it is British preliminary GDP, but traders are also looking ahead closely next week to Japanese GDP, the British job report, and British inflation. Remember that this is not a guarantee of success, it's not a guarantee of profit or a signal, it's just an idea for a trade. Remember that you should always do your own research and manage risk.